Hello everyone, am I audible to all of you? Please let me know. Am I visible and audible? Good evening Vinita. Hello everyone, am I audible to all of you? Good evening Devin. How are you? I hope you are fine. Okay, okay, great. Hello Divya, hello Purva, hello Devin, hello Vinita, Satish. Everyone, first of all, I welcome you all to the Unacademy, everyone. This is your faculty for CA final paper number 3, Advanced Auditing and Professional Ethics, CA Rohit Grover. So I hope you all are fine, you all are good, right? I hope you all are in the good shape of health as well as in the mind, right? Okay, so today we are going to do the revision of the chapter called Audit of NBFC, everyone. So we are going to do the revision of the chapter called Audit of NBFC. As we all know that this is also a chapter like, CFS only, Consolidated Financial Statement, where you can expect minimum 4 mark of question. So audit of NBFC may 4 mark of question may come, and this chapter is very favorite from the examiner's point of view when it comes to the MCQ questions, right? So when it comes to the MCQs, this chapter is quite favorite from the examiner's point of view. So we are going to dedicate today's lecture to this thing, audit of NBFC. Shall we start, everyone? Yes. Very important, Anshika. Very important. That's why I chose the important topics only. So these are the sure shot questions which are definitely going to come in the examination, Anshika. So that's the reason this chapter is quite important from your examination point of view. Chalo. So let us start, everyone. So in this chapter, we are going to understand how do we do the audit of non-banking financial companies. So first of all, the NBFC means what? NBFCs are also like the banks. NBFCs are also like the financial institutions who are also governed under whom? They are also governed under whom? RBI. Are you getting the point? As a bank, as you need to get the license from the RBI, as a bank, you need to get a license from the RBI. You need to get a certificate of incorporation, certificate of registration from RBI. Same is the case with the NBFCs, everyone. So this particular like organization called non-banking financial companies are also going to be taken care of by whom? RBI only. So you cannot operate as an NBFC in India until unless you do not get the certificate from whom? RBI. So right, everyone. So this is just a brief introduction. So main work of the NBFCs are financing companies. Most of the NBFCs are financing companies. There are very few exceptions. There are very few exceptional NBFC companies in India which are into the deposit taking also. Now, generally, what the bank does, bank has the two activities. What are the two activities of the bank? The bank deposits the money, takes the deposits, accepts the deposits, and it also lends the money. But when it comes to the NBFC, NBFCs are more into what? Lending, and they're very much less into what? Deposits. So there are very few NBFCs in India which are into the deposit functions. The most of the NBFCs in India are into what? Lending functions. I hope everyone is crystal clear whatever I have said so far. So this is just the brief introduction of the topic which you should know. So hit the like button. Those who are watching the video, please hit the like button so that I can come to know that how many people are actually indulged in the class, right? I hope everyone is crystal clear what I have said so far. So NBFCs are like the banks, but they are not the banks. They lend the money. They mostly are into the involvement of financing, but they are not actually into what? Taking the deposits. Because for taking the deposits, there are separate RBI norms for the deposit taking NBFCs. Everyone is clear? Okay. Now, what are the things we have to understand in the NBFC? First of all, we have to understand the definition of NBFC. So, as per section number 45 of the RBI Act, 1997. What is the NBFC? NBFC is a financial institution which is a company. It means NBFC is a financial institution which is a company. It means NBFC can be a company. NBFC is a non-banking institution. Why NBFC is a non-banking institution? Because we cannot give the same status to the NBFC what we have given to the banks. That's why it's a non-banking institution with which is a company principal business of receiving of deposits under any scheme of arrangement or any other lending in any manner, and such other non-banking institutions or class of such institutions as the RBI with the prior approval of central government may specify by notification in the official gazette. So there can be a three types of NBFCs. One are financial institutions which are incorporated in the form of company. Second one are non-banking financial institutions which are the basic having the same what do you say features like a bank of deposit, taking the deposits and lending the money. And they are also the non-banking institutions which can from the time to time be notified by the RBI in consultation with central government. Are you getting the point? So RBI can notify any NBFC, but for that RBI need to take the approval of whom? Central government. I hope everyone is clear, right? So this is what do you mean by NBFC, everyone. So most of the NBFCs for the purpose of RBI directions relating to acceptance of public deposits, non-banking financial company means only the non-banking institution which is a loan company, investment company, hire purchase finance company, equipment leasing company, and mutual benefit finance company. Remember one thing, 99.99% of the NBFCs are involved in financing. They are not involved in taking the deposits. I hope all of you agree with me. If you all have an idea of NBFC, you might have read it somewhere also कि most of the NBFCs are into the financing. They are not into the taking of deposits. Everyone right? Agree? Everyone right? Agree in the comment box so that I can come to know that yes, you are there with me in the class. Everyone right? Agree? Yes? Okay. Now, this is what the definition of NBFC, everyone. Now, what are the important types of NBFCs? Now, remember one thing. To become a deemed NBFC, to become a deemed NBFC, suppose you are not an NBFC, you are not an NBFC, but you want to behave like an NBFC. You are in the business of NBFC. So, whom do we call a deemed NBFC? A deemed NBFC is the one whose financial assets constitute more than 50% of the total assets. It means out of your total assets, minimum, or you can say more than 50% of the assets should be which assets? Financial assets. And what is the second condition? Income from such financial assets constitutes more than 50% of the gross income. It means you are not an NBFC, but you can be a deemed NBFC in case your financial assets out of total assets are more than 50% and more than 50% of the total income of that non-NBFC is from what? These financial assets. Are you getting the point or not? So this is what the definition of NBFC, everyone. I hope you all agree with the definition. I hope you all understood the definition. So whom do we call a deemed NBFC? A deemed NBFC is the one which is able to satisfy the two conditions. Condition number one, out of total assets, more than 50% of the assets should be which assets? Financial assets. And out of total income, more than 50% of the income should be from such financial assets. I hope everyone. No, it can be a company. It can be a company. No, NBFC can't be an LLP, Gaurav. NBFC can't be an LLP. It has to be a company. It has to be a company. Okay, everyone. I hope everyone is crystal clear. Okay. Now, how do we register the NBFC? Remember one thing. No NBFC in India. Remember everything. No NBFC in India can operate without obtaining the certificate of registration from whom? RBI. No, and now remember, is there any shortcut to remember the limits and the types of NBFC? Vinita, there is no shortcut. You have to do little bit of hard work. That's why I told you in the beginning of starting of this topic only that this topic is one of the favorite topics for the ICAI when it comes to MCQs. In the MCQs, most very important MCQs have come from the NBFC. So in the NBFC, so many conditions are there, so many limits are there. So there is no shortcut. You all have to remember them. I will try my level best to revise you to make you revise the whole limits in the class itself only, so that more and more revision will help you in embedding or cementing the things in your head. I hope everyone is crystal clear. Okay. Now, every NBFC who wants to run as an NBFC, they have to obtain certificate of registration from whom? RBI. Without obtaining the certificate of registration from RBI, you are not allowed to operate as an NBFC in India. This is also one of the question came in the what do you say, MCQs. So certificate of registration is optional or must, everyone? Certificate of registration is optional or must? Tell me. Certificate of registration is optional or must, everyone? Are you getting the point? Certificate of registration is optional or must? Sir, it is must. Are you getting the point? It is must. And minimum net owned funds requirement for every NBFC. Minimum net owned funds requirement for every NBFC is 100 crores. It is minimum 100 crores. So if you have your own net owned fund requirement as a 100 crores, then only you can register, you can apply to the RBI, and RBI will allot you the certificate of registration. Are you getting the point? So these are the two conditions you have to satisfy. First of all, you have to obtain the certificate of registration from RBI, and second thing, there is a minimum net owned fund requirement is 100 crores. Everyone write CC if you all understood. Everyone write CC if you all understood. Yes. So first one, certificate of registration from RBI, and the second one is plus net owned funds should be minimum 100 crore. Remember one thing, this is the minimum net owned fund requirement for the NBFC, but there are some other NBFC also where the net owned fund requirement will be more, and there are some NBFCs also where net owned fund requirement will be less. Now, this is what do you mean by NBFC. So these are the different types of NBFCs we have to learn in this chapter. What do you mean by asset finance NBFC? What do you mean by investment NBFC? And what do you mean by loan company NBFC? But let me tell you one thing, asset finance NBFC, investment NBFC and loan NBFC has been merged together. They all have been what? Merged together. Now there is one NBFC, ICC. Investment Credit Company. Are you getting the point? ICC NBFC. So no more three NBFCs you have to do. These three NBFCs have now been merged together and it is known as ICC. I hope everyone is clear. So finance assets includes investment in the listed equity shares like investment in the subsidiaries compared to maintain the control. Yes, Gaurav, you are 100% correct. Sir, but there are so many companies who are in the business of granting loan, but they don't have NBFC license. Example, many app-based loan companies. Yes, Harsh, that's what I'm saying. They are not going to be treated as NBFC until unless you do not obtain the certificate of registration from RBI. If you want to operate as an NBFC in India, certificate of registration from RBI is must. So like Dhani is there, or Money Trap is there. So many small, app-based companies are there which will give you the loan, but they are not the NBFCs. I hope I'm crystal clear to everyone. I hope I'm crystal clear to everyone. Right? So those who are watching the video, please hit the like button. I hope I have made clarified to you, Harsh, right? So again, let me tell you one thing, asset finance company, investment company and loan company, they have been three merged together and now they are known as ICC, investment credit companies. Are you getting the point? No more three NBFC, three have been merged and all the three functions of these NBFCs are now being carried out by one. Okay. Now we have to do the microfinance institution NBFC also. We have to do the infrastructure debt fund, non-banking fund institution or core investment companies also, infrastructure finance companies also. So remember one thing, there are different limits which we are going to understand now. Different limits. So first of all, a normal NBFC should have a minimum net owned funds of 100 crores and certificate of registration. That you always should remember. Now, all NBFCs are either deposit taking or non-deposit taking. That is what I told you. There are two types of NBFCs. Either they are deposit taking or they are non-deposit taking. If they are non-deposit taking, ND stands for non-deposit taking, is suffixed to their name. If they are ND, if they are non-deposit taking, wherever you will see the word called ND, ND means it is that NBFC which is deposit taking or non-deposit taking, non-deposit taking. The NBFCs which have asset size of 500 crores or more are known as systematically important NBFCs. So now they may ask you the question in the examination, what do you mean by SI NBFCs? What do you mean by SI NBFCs? What do you mean by SI? SI stands for systematically important NBFCs. What do you mean by SI? systematically important NBFCs. But to become a systematically important NBFC, you should have an asset size. You should have an asset size of minimum 500 crores. You should have an asset size of minimum 500 crores. Yes, Harsh, that is an amendment. That is an amendment. The three NBFCs have been merged together: asset finance company, investment company, and loan company. Now they are known as ICC. What is ICC? Investment credit companies. Are you getting the point? So what we have understood, there are two types of NBFCs: deposit taking, non-deposit taking. And if you are a non-deposit taking, ND will be written. And if you are a systematically important NBFC, then you should have a minimum net asset size of 500 crores. I hope everyone is crystal clear. Okay, sir, do this conversation later on, honey. So all of you must contact the Harsh Bank. I think he has added me over there. So do contact the Harsh after the end of the class. Don't discuss all these things in the class only. Concentrate in the class. The remaining things we can do at the later stage also. Now see, what is the first NBFC we are doing? Asset finance NBFC company. Asset finance NBFC means what? Those NBFCs which are involved in financing the assets. Suppose there is one company. That company wants to buy the big generators. Company wants to buy the big cranes. Company wants to buy the big JCBs. Are you getting JCB ki khudai? You all must have seen those. Is company wants to buy the big automobile, big things they want. Now those assets are running in crores and crores. So company does not have the money. Company will approach these kind of NBFCs, and these kind of NBFCs will finance those assets. Are you getting the point? And those NBFCs are known as asset finance companies, NBFCs. I hope everyone is clear. Okay, the principal business of these companies is to finance the assets such as machines, automobile, generator, material, equipment, industrial machines. Principal business for this purpose is defined as aggregator financing real and physical assets supporting economic activity. Income arising from there should not be less than 60% of its total assets and total income respectively. Are you getting the point or not? Income of asset finance companies, incomes of asset finance companies out of total income of asset finance companies from financing assets should not be less than what? Should not be less than 60%. So say for example, if there is 100 crores of income for the total asset finance company, out of that 100 crores of income, minimum 60 crores of income from asset financing activity. Are you getting the point or not? Minimum 60% of the income from the asset financing company, and minimum 60% of your assets also should be the asset financing only. I hope all of you agree with me. If you all agree with me, write the word CC. I hope all of you understood the topic. Waiting for you all. Give me the reply. Right? Okay. Now, asset finance company is the company whose main line of activity is financing the assets, and its minimum requirement of the asset financing asset is 60%, and minimum 60% of the total income should be from those asset financing only. Now, what is the next company? Investment company. So the main business of these companies is to deal in the securities. We all know what do you mean by investment companies. Investment companies are those companies whose main business is to deal with the securities. Loan companies. What do you mean by loan companies? Loan companies are those NBFCs which are in the process of granting the loans. The main business of such company is to make the loans and advances, not for asset but other purposes such as working capital finance, like small term loans, CC loans, working capital loans. Those kind of NBFCs are there. Because if they're financing the asset, then it will come under the category of asset financing companies. They are other than asset financing company. Now, the most important MCQ question, most important things are going to come. Infrastructure finance companies, IFCs. What do you mean by infrastructure finance companies? Infrastructure finance NBFCs are those NBFCs which finance the big infrastructure projects. Are you getting the point? Suppose L&T company is there, GMR company is there. They are making the metro, or they are making a canal, they are making a dam, or they are making a highway. So while making these kind of big projects, there's a long time period required and a hell lot of money is required. And those NBFCs which finance these kind of companies like L&T and GMR, those kind of NBFCs are known as infrastructure finance NBFCs. But to become an infrastructure finance NBFC, there is a minimum requirement. Minimum requirement is net owned funds should be at least 300 crores. For a normal NBFC, what is the net owned fund requirement? For a normal company, what is the net owned fund requirement? Everyone, please tell me. It is 100 crores. For the normal company, it is 100 crores. And for the infrastructure finance company NBFC, it is minimum 300 crores. And 75% of its total asset is in the infrastructure loans. Means out of the total assets, 75% should be in the infrastructure. Now tell me, in the asset finance company, minimum 60% should be the asset finance, and in the infrastructure, minimum 75% should be the infrastructure loans, and in the deemed NBFC, it is minimum 50%. If you remember, so deemed NBFC में minimum 50% requirement, एसेट फाइनेंस कंपनी में मिनिमम 60% रिक्वायरमेंट एंड इंफ्रास्ट्रक्चर फाइनेंस कंपनी में मिनिमम 75% रिक्वायरमेंट फॉर अ नॉर्मल एनबीएफसी टू स्टार्ट एन एनबीएफसी बिजनेस मिनिमम 100 crores ऑफ net own funds required, but for the infrastructure finance company minimum 300 crores of net fund required, and they must have a credit rating also. You all know about the credit rating. Credit rating is generally given to these NBFCs by the credit rating agencies. Are you getting the point? They must have a credit rating called A. There should be a minimum credit rating of A to these NBFCs or above. It should be A or above and has a CRAR of minimum 15%. So what are the four conditions? Four condition is minimum net owned fund is 300 crores. Minimum 75% of the total asset should be infrastructure finance. Then they should have a minimum A or above as a credit rating, and most importantly, their CRAR should be minimum 15%. Everyone write CC if you all understood. Sir, is it because that infrastructure has long gestation period, so they have more net on funds? Yes, yes. Because they have to be more financially sound before, financing the big projects. That is the reason, Harsh. Very nice question. I hope everyone is crystal clear so far, whatever I have told you. I hope everyone is crystal clear so far, whatever I have told you. Right, everyone? Right? Okay. Now, this is called infrastructure finance company. Now, what is systematically important, everyone? I already told you to become a systematically important NBFC, what should be your asset size? Everyone, please tell me. To become a systematically important NBFC, what should be your asset size? I'm not going to discuss the audit of different types of NBFCs. Those are lollipop questions. You can do it on your own. I'm here to tell you the MCQ point of view of this NBFC chapter. I will try my level best to cover those parts also if time allows. But most importantly, we have to do the MCQ thing. Now tell me, systematically important. Yes, 500 crores. Are you getting the point? And which has deployed at least 90% of its assets in the form of investments. If you are a systematically important core investment NBFC, CIC stands for core investment NBFC. If you are a systematically important core investment NBFC, and ND stands for what? Non-deposit taking. So what is the total name? Core investment company, non-deposit, systematically important. So systematically important means 500 crores. Core investment means your 90% of the assets should be in the form of investments. In what? Shares and debt instruments. Your 90% of the assets should be in the form of investments in the form of shares and debts. And out of that 90%, 60% should be invested in the equity shares only. So listen to this. Your asset size should be minimum 500 crores. Do you agree with that? Your asset size should be minimum 500 crores. Second thing, out of total assets, 90% of the assets should be in the form of investments. Investments in the form of shares and investment in the form of debentures. Are you getting the point? And out of these 90%, 60% should be definitely in what? Equity. I hope everyone is crystal clear. I hope everyone is crystal clear. 500 crores. Anshika, wherever the systematically important word will be written, it is 500 crores, Anshika. Normal NBFC, it is 100 crores. Normal NBFC, it is 100 crores. But systematically important, it is 500 crores. Infrastructure finance, it is 300 crores. I hope you understood the point. I hope you understood the point. Anshika? Asset limit, asset size limit. Vinita, 500 crore is an asset limit. Net on fund is 300 and 100. 500 crore is asset limit. Everyone write CC if you all understood. Right? Okay, next one. We have done the infrastructure finance NBFC. Now we are going to do infrastructure debt fund. Don't mix both of them. Infrastructure finance is different and infrastructure debt fund is different. IDF, Infrastructure Debt Fund NBFC, is a company registered at NBFC to facilitate the flow of long-term debt into the infrastructure projects. IDFC NBFCs raise resources through issue of rupee or dollar denominated bonds of minimum 5 years maturity. Only infrastructure finance companies can sponsor IDF NBFCs. Are you getting the point or not? Now, remember one thing. Infrastructure finance company is different. Infrastructure debt fund company is different. Now, Infrastructure Debt Fund NBFC is that company which is providing the long-term debt to the infrastructure projects. Long-term debts to the infrastructure projects. Now, the question is, sir, where do the Infrastructure Debt Fund get the money? Infrastructure Debt Fund get the money from the Infrastructure Finance Company. So, it is like this. Infrastructure Finance Company finances the Infrastructure Debt Fund Company. Infrastructure Debt Fund Companies finances the long-term debt instruments. Did you get the point or not? So, infrastructure finance companies finance the infrastructure debt fund companies. Infrastructure debt fund companies fund the long-term debt infrastructure projects. Everyone write CC if you all understood. Sir, if the infrastructure NBFC is systematically important, so for them, see, you are confusing Harsh. Systematically important means 500 crores asset size. 500 crores asset size. Net owned fund requirement will remain 300 crores only. Asset size and net owned funds both are different. Everyone, do you all agree with me or not? What I'm saying? Those who are watching, please hit the like button first. Everyone, those who are watching, please hit the like button. If you think that this video is worthwhile to watch, okay? It really gives us a motivation to come up with the maximum number of, more number of things for you guys, okay? Now, non-banking financial companies, microfinance institution. Now, there are some NBFCs which are microfinance NBFCs. Now, microfinance means what? Those kind of NBFCs which are giving the big loans or which are giving the small loans. Which are giving the small loans. But in this particular microfinance NBFC, there are so many limits you have to remember. So many limits you have to remember. Now, NBFC, microfinance. Microfinance NBFCs are those non-deposit taking NBFCs which have at least 85% of its assets in the form of microfinance. Now, remember one thing, for the asset finance company, it is 60%. For the infrastructure finance companies, it is 75%. For the core investment companies, it is 90%. And for the microfinance companies, microfinance NBFCs, it is 85%. Everyone write CC if you all remember the limits. Asset finance company 60, IFC, infrastructure finance company 75, core investment company 90%, microfinance company 85%. Clear everyone? Clear everyone? Okay. Now those microfinance NBFCs are those NBFCs. Such microfinance should be in the form of loan given to those who have an annual household income of rupees 1 lakh in the rural areas and 1,60,000 in the urban or semi-urban areas. Now remember one thing, if you are a borrower and you are staying in a rural area and your maximum annual household income is 1 lakh, then only microfinance company will give you the loan. And if you are staying in urban area or semi-urban area and your total annual income is 1,60,000, then only you will be getting the loan from the MFI, microfinance companies. Are you getting the point? And such loans should not exceed rupees 1 lakh. Such loans should not exceed rupees 1 lakh. The loan amount should not be more than 1 lakh, and minimum 24 installments you have to offer them. As a microfinance, you have to offer the minimum 24 installments. Further, the loan has to be given without any collateral. No security required to be given to take this loan. Loan repayment is done weekly, fortnightly, and monthly. That you have to ask the borrower, does he want to pay the installment weekly? Does he want to make the installment every 14 days, or he wants to make the installment monthly, at the choice of the borrower. Net on fund requirement is 2 crores. What is the net on fund requirement? 2 crores. Write small notes for this, sir. Okay. I'll try my level best. I can't promise it, but I'll try my level best. So once let us complete this, we'll revise it, and along with the revision only, I'll try my level best to write all this. Okay? Okay, Vinita? Okay. Okay, let us revise everyone. Let us revise everyone. To be a normal NBFC, what is your two requirements? Certificate of registration plus net owned funds of 100 crores. Am I correct or not? Okay, to become an asset finance company, what is your requirement? 60% of the assets, 60% of your total assets, and 60% of your total income should be from this activity only. Okay, you are a core investment company. In the core investment company, you should have 90% of your total assets should be in the investment in the form of shares and in the form of debentures, and out of this 90%, 60% should be invested in the equity. Am I correct, everyone? Now if you are a infrastructure finance company, in the infrastructure finance company, minimum infrastructure finance, minimum 75% of its total assets should be the infrastructure finance. Minimum 75% of the total should be the infrastructure finance, plus 300 crores of net owned funds requirement is there. 300 crores of net owned funds. You should have a credit rating of A or above. You should have a credit rating of what? A or above, plus your CRAR should be minimum 15%. Did you understand about this four? Am I correct? And if you want to become a deemed NBFC, then two conditions: 50% of the total assets and 50% of the total income should be from the finance assets. 50% of the total assets and 50% of the total income should be the finance assets. Everyone clear or not? And if you are a microfinance, there are so many requirements. Net owned funds requirement is 2 crores, right? 85% of the assets should be microfinance assets. Am I correct? Then if you are a borrower from the rural area, then your net annual income should not be more than 1 lakh. And if you are a borrower from the urban area or semi-urban area, then in that case your net annual income should not be more than 1,60,000. Maximum loan amount should not be more than 1 lakh. Minimum 24 installments you have to give. And you have to no security. You can't ask any security, and repayment should be weekly or monthly or fortnightly. I hope everyone is crystal clear with now. You can do one thing. I'll keep it for 1 minute. You take a snapshot of this. I'll keep it for 1 minute. You take a snapshot of this. Everyone, please take a screenshot of this particular thing. I will keep it for 1 minute. And once you have taken the screenshot, please write taken. in the comment box. Once you have taken the screenshot, please write the taken in the comment box. Minimum. 24 installments is minimum. It is minimum, Ankit, not maximum. I want everyone to hit the like button first in the video and take a screenshot. Once you have taken that screenshot, write the word taken. I hope everyone is clear now. Okay. Okay. Chalo, great. Now let's move to the next thing. I hope now it is looking easier if you have. Thank you, sir. I want these notes only. Don't worry, don't worry. It's my pleasure. I hope now keeping all these things at one place will help you. Can microfinance NBFC be systematically important? No. The name itself says that it is microfinance. It cannot be systematically important. The reason is very simple. It's a microfinance. These are being kept specially for the small borrowers. Okay. Now I hope everyone is clear. Now, what is the next one? Mortgage. Mortgage NBFCs. What do you mean by mortgage NBFCs? Are you getting the mortgage guarantee NBFCs? What do you mean by mortgage guarantee NBFCs? So, say for example, I have taken the loan. I have taken the loan from the bank. I have taken the loan from the bank and I have given the mortgage also. I have taken the loan from the bank and I have given the mortgage also. But the bank is saying that your mortgage is not enough. Bank is saying that your mortgage is not enough. They want some extra guarantee. So these NBFCs will help me and they will give the guarantee to that bank on my behalf. I hope everyone is crystal clear with the working of mortgage guarantee. So say for example, I have taken a big loan from the bank and I have given the mortgage property also, but that is not sufficient. So this NBFC will give the guarantee to that bank on my behalf. So it is a mortgage guarantee and 90% of its total turnover should be from the mortgage guarantee business only, everyone. 90% of total turnover. 90% of total turnover should be from the mortgage guarantee because name itself says that it is a mortgage guarantee company, or at least 90% of the gross income. So either total turnover or gross income should be from the which activity? Mortgage guarantee. Everyone is crystal clear? Right, CC, if you all understood. And what is the minimum net own fund requirement? Same like a normal NBFC. It is same like a normal NBFC. I hope everyone is clear. I hope everyone is clear. Done? Okay, chalo. Now let us proceed with the next one. Is it a kind of bank guarantee? No. Bank guarantee is a different concept. No, it is not. In the bank guarantee, bank gives the guarantee for the importer. In the bank guarantee, bank gives the guarantee for the importer. This is not a bank guarantee. It is a different concept. When your mortgage is falling short, then these banks, these NBFCs come in front of you and they will give the guarantee on your behalf. Everyone, I hope you understood and you are understanding today's lecture. Yes, everyone. I hope you are understanding today's lecture. Let me have some water and then we'll start. So I'll try my level best to tell you how to do the audit of these particular NBFCs only, which may come in the examination. Okay. I will try Sanchit to cover the whole NBFC, but at least I will cover 70 to 80% of the NBFC for sure. Don't worry. Some hard work you should also do, na Sanchit? Not everything should be on us. Little bit of hard work you should also do. I will try my level best to complete the most of that. And those which are very easy, where you can handle the things on your own, I'll leave it to you guys. Okay, guys? Okay, now everyone, next topic. What is the difference between NBFCs and banks? That is a simple difference between the NBFCs and bank. It's a very small topic, but right, NBFCs cannot accept the demand deposits. Banks can. NBFCs do not form part of the payment and settlement system and cannot issue checks drawn on itself. Banks can. And in case the bank goes insolvent, the bank gives you the DICGC, 1 lakh of guarantee, but NBFCs can't give. Deposit insurance facility of DICGC is not available to the depositors of NBFCs, unlike in case of banks. So these are the three things which makes the NBFC different from the banks, everyone. What are the three things which makes the NBFC different from the banks, everyone? They cannot accept the demand deposits. Second thing, they cannot become the part of settlement and repayment system. And third thing, they cannot accept the checks drawn on itself. Fourth thing, they cannot give you the DICGC, what do you say, guarantee what the banks can give. Yeah, this is my pace actually, Sanchit. I'm trying my level best to cover maximum. This is my pace. I can't go that much big also because I don't know. Yeah, I'll try to cover maximum. Don't worry at all. Okay, can't this NBFC finance directly to the mortgager? No, their purpose is mortgage guarantee only. So if they are directly financing the mortgager, then they will no longer be called mortgage guarantee NBFCs. Those who are watching the videos, hit the like button. What is happening? Am I audible and visible to you, everyone? Please let me know in the comment box because I am unable to see my own video on the YouTube. Please let me know. I'm unable to see myself on the YouTube. Please let me know. Am I audio? Okay. Okay. Yeah, yeah, yeah. Now I got it. Now I got it. Yes, yes, yes. I got it. Yeah. Okay. Now, you all know about the provisioning, everyone. Like in the banks, we have to start making a provision. In the banks, we have to start making a provision. You all know that if the non-performing assets are there in the bank, as per the RBI norms, we have to make a provision. Same provision facilities or same provision norms are there in the NBFC only. The provisioning requirement as given below shall be applied to applicable to every NBFC except NBFC MFIs. Remember one thing, microfinance institutions, NBFCs need not apply these NPA norms. NPA norms are for everyone other than NBFC MFIs. Clear everyone? Clear everyone? Now see, if there is a loss of asset, then you always know that there is a 100% provisioning you have to make. Loss of asset means what? Which is more, which the chances of recoverability are completely zero. At that point of time, 100% provisioning you have to make. Doubtful, 100% provision to the extent to which the advance is not covered by the realizable value of the security. If it is a doubtful asset, if it is a doubtful NPA, then in that case 100% for the unsecured part. In addition to item A above, it means in addition to unsecured 100%, depending upon the period for which the asset has remained doubtful, provision to the extent of 20% to 50% of the secured portion, that is estimated realizable value for the outstanding, shall be made on following period basis. Now see, up to doubtful up to 1 year, you have to make 20% on the secured portion and 100% on the unsecured portion. And if it is 1 to 3 years, you have to make 30% for the secured portion, 100% for the unsecured portion. And if it is doubtful for more than 3 years, you have to make 50% for the secured portion and 100% for the unsecured portion. So basically what they are saying that if it is a doubtful up to 1 year, 1 to 3 years, more than 3 years, then secured portion, unsecured portion of the NPA, it is 20%, it is 30%, and it is 50%. Am I correct? And for the unsecured portion, it is 100%, 100%, and 100%. Clear, everyone? I hope everyone is crystal clear what I'm saying. And if it is loss asset, you all know if it is a loss asset, either it is secured or unsecured. First of all, though, it is not secured, so it is always 100%. Everyone write CC if you all understood. Everyone write CC if you all understood. Everyone write CC. And if it is a substandard, then 10% for the secured portion. Are you getting the point? If it is substandard, then it is 10%. I hope everyone is clear. If it is substandard, then it is 10%. And if it is standard, every applicable NBFC shall make provisioning for the standard at the rate of 0.30% by the end of the March 2016, 0.35 by 2017, and 0.40. It means currently it is 0.40. You don't have to remember 0.30. You don't have to remember 0.35. You have to remember 0.40. From 2018 onwards, it is 0.40. So it means if it is a standard asset, if it is a standard asset, it is 0.40 percentage. Clear, everyone? Clear, everyone? Whatever the amount of the loan, on that percentage you have to apply. Hushback. Suppose I am a NBFC, I have given 100 crores of loan. Out of 100 crores, 60 crores is secured, 40 crores is unsecured. Out of 100 crores, 60 crore is secured, 40 crore is unsecured. For the unsecured part, to 100% you have to create. For the 60%, for the 60 crores of loan which is secured, on that you have to see, is it doubtful up to 1 year, 1 to 3 year, or more than 3 years. If it is up to 1 year, create 20% of the 60 crores. Then it is 1 to 3 years, create 30% of the 60 crores. If it is more than 3 years, create 50% of the 60 crores. And if it is loss asset, create 100% for the secured as well as the unsecured. If it is substandard, create 10% of the 60. And if it is standard, create 0.4% for the 60. I hope all of you have understood. I hope all of you have understood. Clear? So this is for doubtful. This is for doubtful. This is for loss. This is for substandard. And this is for standard. Sir, we are seeing loan value and not the value of the security. Secure, obviously, we are not talking about the, see, realizable value of the security. We are talking about the value of the security when it comes to secured portion. Because how much you are going to realize when you will sell that property in the market, that is what you are going to get now. How much you can fetch actually, on that only you can do the provisioning. Are you getting the point? Are you getting the point, everyone? Chalo, let us proceed with the next part. Let us proceed with the next part. Now, what is the audit procedure? What are the steps involved? Now, remember one thing, I will tell you the main steps, and these steps you can write it in any NBFC question. I will tell you the main steps, and these steps you can write in any NBFC. First of all, are you getting the point? First of all, you are going to write something about the nature of NBFC. First of all, one point should be on the nature of the NBFC. What kind of NBFC you are doing the audit for? Are you doing the audit for the lease financing NBFC? Are you doing the audit for the hire purchase NBFC? Or you are doing the audit for the infrastructure NBFC? So write one point on the nature. Second point should be on the internal control system. Second point should be on the internal control system. Third point should be on the credit appraisal system. Now, sir, what do you mean by credit appraisal system? Credit appraisal system is that system by which the lender will come to know whether borrower will be able to repay my money on time or not. Every lender should have a good credit appraisal system. It should have a strong internal control system, and it should have a what kind of nature of NBFC you are doing. That point, 3 points you have to write. Then one point should be dedicated to the security. One point should be dedicated toward security. One point has to be written on security. And one point you have to write on documentation. Whether the proper documentation has been provided by the borrower or not. Are you getting the point? So these are the major 5 points which will come in every NBFC audit. Either it is a hire purchase or it is a lease financing or any NBFC audit. These are the points you are going to get. Crystal clear, everyone? Right or not? Now see, Scan through the memorandum and articles of the company. It means from the MO and AOA of the NBFC, you will come to know that which kind of business that NBFC is involved into. Are you getting the point? That is what I told you the first point. Are you getting the point? So whenever you are doing the audit of NBFC, scan their MO and AOA, from which you will come to know about the nature of the business of the NBFC. Clear? Second point, evaluate their internal control system. Because you are giving a loan to the borrower, you never know whether the borrower is going to repay you the loan back or not. The auditor should gain the better understanding of the accounting system and internal control system of the NBFC. And most importantly, you have to see whether the certificate of registration has been obtained from the RBI or not. Are you getting the point? And now it is not minimum 2 crores, it is 100 crores. And you have to write one point on this one also. Certificate of registration plus minimum net own funds of 100 crores. So if you remember the limits, common audit procedure you apply in every question, and I can guarantee you, if the question is coming for my 5 marks and you will write these 6-7 points which I have told you so far, you will definitely get 4 out of 5 marks. Are you getting my point or not? So audit of NBFC chapter is not that difficult. The difficulty level in this chapter is so many limits are there. And if you keep the all the limits at one place, now I can guarantee you easily you can remember till the time of your examination. I hope all of you will agree with me. I hope all of you will agree with me. Am I correct or not? Yes or no? Yes. So this is how the various points relating to NBFC. Are you getting the point? And investments in liquid assets, that also we know. That also we know. Investments in the liquid asset, every company has to maintain the required number of investments in the liquid form. Why required number of investments are required in the liquid form? Because if you're a deposit taking, NBFC, deposit holder can at any point of time demand his money. At that point of time, you should have the liquid investment so that you can sell it in the market immediately and can meet the demand of that deposit holder. Did you understand the point or not? Yeah, you can say Hush Bank. You can say when I'm using the word internal control system, it is in the broader sense. When I'm using the credit appraisal system, it is into the narrow sense. Credit appraisal is only required to check the credit worthiness of the borrower. So that's why I kept these 2 points separately so that you can write it in the examination. So one point is on the MOA, AOA and the nature of the business. One point is on the internal control system. One point is on what? It is on credit appraisal system. One point on the minimum net own funds and COR, certificate of registration. One point is on the security system and one point is on the documentation. So like 6-7 points if you are able to write till the time of examination, then you are going to make the examiner flat with your answer and he will be in a position, he has to be in the position to give you the good marks. I hope you all understood what I'm trying to tell. I hope you all understood what I'm trying to tell. Are you getting the point or not? So these are some of the deposit taking directions. These are some of the deposit taking directions. So if you're a deposit taking NBFC, what are the directions you have to follow? These are the directions which are written here. Are you getting the point or not? So these are the directions. So today in that group, I will share the yesterday's audit of consolidated financial statement as well as the audit of NBFC topic also. Okay. Clear everyone? And one more thing, this is also very important question. Classification of frauds by the NBFC. What kind of frauds by the NBFC you have to classify? So there are total 7 types of frauds which the auditor has to which the NBFC has to classify. Frauds are relating to misappropriation and criminal breach of trust. Those frauds which are relating to misappropriation and criminal breach of trust. Frauds relating to encashment through forged instruments, manipulation of books of accounts through fictitious accounts, and conversion of property. Unauthorized credit facilities extended for the reward or illegal gratification, negligence and cash shortages, cheating and forgery, irregularities in the foreign exchange transactions, and any other type of fraud not coming under the specific head. These are the 7 classification. Very, very important question. It has come in your examination for so many times. Classification of the frauds by the NBFC. Very, sir, can we combine COR with the nature? Uh, Nature of the business is something a different point you have to write, and COR is a minimum statutory requirement point you have to write. So it all depends upon you. How much is the length of an answer you want to keep? Accordingly, you can give your answer. So there are 7 categories of the classification of frauds by the NBFC, everyone. Frauds relating to misappropriation, so M. Fraud relating to frauds, fraud relating to unauthorized credit facilities, negligence. Are you getting the point? Negligence, cheating and forgery, irregularities and other. Um, CIO, So remember one thing. These are the 7 classification of funds. M stands for misappropriation. F stands for fraudulent encashment through forged documents. Then U stands for unauthorized credit facilities extended. N stands for negligence and cash shortages. And then cheating and forgery. C stands for I stands for irregularities and foreign exchange transactions, irregularities in foreign and any other. So these are the 7 things. So if you will get a 4-mark question, ki classification of frauds by the NBFC, these are the 7 points you have to write. Clear everyone? And one more thing, they may ask you the limit relating to cash shortages. They may ask you the limit relating to cash shortages. So see, cases of negligence and cash shortages, cases of negligence and cash shortages and irregularities in the foreign exchange transaction referred in item A and F above are to be reported as fraud if the intention to cheat or defraud is suspected or proved. Remember one thing, NBFCs. Now listen to this very, very carefully. This is a question. It may come in your examination. Fraud relating to negligence and fraud relating to irregularity. Green color part. D and F point. D and F point, you should classify it as a fraud only when NBFC has a proof to prove it. If the NBFC does not have the proof to prove the negligence and does not have the proof to prove the irregularity in the foreign exchange transaction, you should not classify it as a fraud. Everyone write CC if you all understood. So negligence and cash shortages, irregularities in the foreign exchange transactions, these two things can only be reported as fraud if you can prove the intention or if you have a proof of doing that. Everyone write CC if you all understood. Everyone write CC if you all understood. Clear everyone? Sir, logic of it. Logic is very simple. Negligence and cash shortages and irregularities are something which can take place inside the organization only. Negligence is a very big claim. Negligence means your employees of the NBFC are not doing their duty properly. Irregularities means they are involved in the what do you say, in the paperwork. Foreign irregularities means see, basically in the negligence and cash shortages and irregularities may you have to show the intention. Negligence can be of 2 types. It can be intentional negligence, it can be unintentional negligence. Irregularity also can be of 2 types. It can be intentional, it can be unintentional. If it is unintentional, it will not be called as a fraud, it will be called as an error. Are you getting the point? But if it is intentional, then it is a fraud. So if you are able to prove the intention behind the negligence and if you are able to prove the intention behind the irregularity, then only it will be treated as a fraud. I hope now you got the clarification, Harsh. Did you get the clarification, Harsh? Sir, responsibility is on NBFC and not on auditing. Yes, the topic name itself says the classification of fraud by the NBFC. But the auditor is going to check whether these frauds have been properly classified or not. I hope, Sneha, you understood. Classification will be done by, see, preparation of financial statement, everything is the responsibility of the management only. But whether the management is doing it properly or not, that the auditor has to check or not. Clear, everyone? Right? So this is also one of the important question what they may ask you. And these are the audits which I already told you. Hire purchase company audit they may ask you. So 1 point on internal control, asset verification, asset acquisition. if you have an idea about the hire purchase, you can easily write down the points. I already told you the general points. One point relating to statutory requirements, one point relating to nature, one point relating to internal controls, credit appraisal. Are you getting the point? Security verification, physical verification of the asset. Now you are a hire purchase company, you have financed a hire purchase, so obviously you would like to know, you would like to do a physical verification at regular intervals ki whether the asset is being properly being kept by him or not. Are you getting the point or not? And as a hire purchaser, as a hire purchase finance company, you will pay the money directly to the vendor, not to the borrower. So all these are the things you have to remember. If you know the concept of hire purchase, if you know the concept of lease financing company, I don't think so that there will be any difficulty in writing the answers in the examination. I hope you all agree with me. Sir, this classification by NBFC will be in notes to accounts. Yes, it will be in the notes to accounts. I hope all of you agree with me. Yeah. So all of you are writing when November 20, all of you are writing in November 20, everyone, or those who have opted out are writing in Jan. Please give the answer. Any doubt, anything relating to exam, anything relating to other things you want to clarify, please clarify. No issues. I'm available with you people. Harsh, please reply everyone. How they can share the number to you. Please reply to everyone. So everyone, I hope you understood today's lecture also relating to audit of NBFCs. I tried my level best to complete the maximum portion of NBFCs. The only concerns which are relating to NBFCs which we have not covered are relating to Caro related points, something relating net owned funds and all. So say if NBFC classifies fraud property, then statutory auditor will give the clean opinion. But as regards as internal auditor, will he give some negative opinion? Yes, you may say that it may happen, Harsh. Yes, you're correct in saying that. So everyone, then in the next three lectures, I think tomorrow, day after tomorrow, and day after tomorrow, day after tomorrow, and day after tomorrow, I'm going to come up with the general things. Your doubts relating to auditing subject, any kind of doubt from any topic at any point of time, 5:30 to 6:30, you can ask me. For the next three classes I have dedicated in general to you people. Bring any kind of doubt, write in the comment box, share it with your friends, that for the next 3 days, 1 hour, it means approximately 3 hours are there where you can interact with me and you can have any kind of information you want. Sir, this is the mental pressure I'm facing, how to come out of that, this is a problematic area, ABC analysis of the chapter. Sir, how should I start my preparation, what time we should devote to this particular subject and all. For the next three classes you can come without any with any kind of information, any kind of doubt. If you have, you can come to me, no issues at all. For the next 3 days, yeah, for the next 3 days I'll be there with you guys till your examination, don't worry. So please make sure that the next 3 days you are telling your friends also to come. If they are also facing the problem, I would be very much happy to help them out in that particular thing also. So tomorrow, day after tomorrow, and day after tomorrow, 5:30 to 6:30, I'm again going to come live. I have kept these three sessions general for you people: ABC analysis, planning strategy, each and everything about the exam, how to attempt the MCQ question, how to carry out the other questions, how to write the answer, presentation skills, any kind of query you have every right to ask me. Yeah, Kiran Jain, I'm sharing these notes in one group which you people have created. Please make sure that you are contacting the Harsh Bang in the group right now in the comment box, and he will add you to the group. Okay, so he will add you to the group. You can become a part of that group, and I'll keep on sharing the information to all of you. Don't worry at all. Okay, don't worry at all. I'll definitely share these things to you. So I hope everyone is justified with today's session also. So now I'll take a leave from you guys, and I'll see you guys tomorrow also at the same time, 5:30 to 6:30, right? So if you don't have any doubt right now, if you want to ask me the doubts tomorrow, day after tomorrow, or day after tomorrow, I would love to, solve your doubts. And remember one thing, guys, from 16th November, again, I'm telling you, from 16th November, my two regular batches are starting. One is for CA final audit batch, and one is the CA inter audit batch. I'm starting from 16th November, and it is going to be a plus course. It is going to be a CA final batch, is going to be approximately 120 to 140 hours. Detailed batch for May 21 and November 21 students on Unacademy platform. So you just need to download the Unacademy learning app. There you can see my special classes, and you can subscribe my classes. So to your juniors, you can refer the CA inter audit batch, and to your friends and colleagues, you can refer the CA final regular batch. Both are regular batch, and they are applicable for the May 21 and November 21 examination. So any student who is appearing in May 21 or November 21 examination, they can come up and they can learn the audit in the most comprehensive manner. CA final, CA inter, both the levels audit subject I'm going to start from 16 November. Are you getting the point? The coming Monday. And if you want to subscribe, or if your friends want to subscribe, or if your junior wants to subscribe, please let them know my discount code. So if you will put the Grover 10 while doing the subscription, automatically you all will get the 10% discount over there. Are you getting the point? So that is it from my side, everyone. Thank you so much for lending your patient ears today. I'll borrow it again in the next video tomorrow. Till then, take care of your health, and all the very best for your preparation, and all the very best for your examination. Bye bye, everyone. Take care. Bye.